Okay, so, with inflation, that's unemployment in the UK there, rising 5.2%, wage growth slowing to 4.2%. How's this data being digested over there?
I think that what we're seeing now is more than just a sort of normalization in the UK. It's the labour market clearly starting to soften. I think the sentiment that where people are expressing on social media is clearly being seen in the data, especially according to the Office for National Statistics, because they've released unemployment data showing that it's at 5.2%. And I think if you take that number universally, it looks quite low, but that's the highest that we've seen in the UK since the pandemic. And wage growth has also slowed, as you said, to about 4.2%. And the private sector is even showing lower pay figures. And that basically tells us that hiring demand is easing and pay pressures are starting to come off. Now, I think there are two major things that are driving it. I think, first of all, it's got to be AI. Over the past couple of months, we've been, recording and reporting about hundreds of big corporate organizations laying off staff. I think particularly in retail, anybody who goes shopping in the West, most of the time when you go to the checkout, you're not speaking to a sales rep now. You're putting all of your items into a monitor by yourself. And, these are affecting real-time people. And we can see that in the figures. Also, I think in the UK, what's quite peculiar is, of course, Rachel Reeves and the Labour government. During their last budget, there were lots of tax hikes for employers. So it's costing employers more to keep people. Payroll taxes went up, minimum wage rose. And I think businesses are clearly responding by slowing recruitment. And I think what's more worrying about this data is that you can especially see among younger workers, employment is really slowing down. So those who are at university, usually they'd have a part-time role, but now that part-time role is being taken over by an AI bot. I think it will be quite nervous around Downing Street at the moment.
Right, AI and jobs. We keep talking about those two, at this point. But, given this softening in jobs and pay pressures, how likely is a March rate cut, from the Bank of England? And what could that mean for, the sterling and gilt yields?
Well, of course, the data feeds directly into the interest rate story, which is what most business hacks are talking about in the UK this morning. I think it certainly strengthens the case for a March cut from the Bank of England. I think markets were already pricing in about a 3/4 chance of a move, and policymakers have been waiting. But I think this softer jobs data and ease in wage growth accelerates that impression. Now, the bank held rates at 3.75% last time, but not every deputy governor agreed. But Andrew Bailey has said that there's room to loosen policy this year if demand keeps weakening. So I think that's kind of what we're seeing. Now, since the data was released this morning, we've already seen the pound dip. So I think some easing in the gilt yields is likely.
All right, so away from the data now, we got that news yesterday that China, they've decided to grant, visa-free travel to the UK and Canadian nationals. How's this being received in the UK?
Yeah, I think it's quite positive. I think anybody who travels to China will love the idea of not having, to queue for a visa, right? Nobody likes going to those visa appointments with a prospect of being cancelled or not being given entry. So I think this is quite a good thing. But of course, it's still very, very political. And this is all part of the takeaways, or some would say non-takeaways, that the Prime Minister, Sir Keir Starmer, got following his meeting with Xi Jinping a couple of weeks ago. And actually, that new move begins today. So from today, the 17th of February, UK passport holders can enter mainland China for up to 30 days without a visa. And of course, this has been a huge, big barrier. And it's a very costly application process, as I've said. So in a commercial angle, this is seen as a good thing. I think according to data, tour operators are already reporting a surge in inquiries. But then, like I said, that it's so political. In fact, we even discussed this on my business show, Channel Business Global, last week, because there are still British nationals being held by China, and a lot of British MPs didn't think that Keir Starmer came away with enough to restore those frosty relations. So some would see this as a win, but others will see this as not enough.
All right, not enough. We'll keep tracking that one. Every country now trying to make deals at this point. Thank you so much, Juliana.
Thanks, Laddie.
All right, let's get to check on other stories now. See, Japanese government bonds have extended their week-long rally following a strong 5-year note auction that reinforced investor confidence amid easing concerns over rate hikes, fiscal risk, and inflation. Super long bonds led the gains with yields on the 20 to 40-year maturities falling by at least 10 basis points, while shorter dated yields also moved lower. Demand at the 5-year auction improved for the first time since September, signaling renewed appetite for Japanese debt. And Chinese tech giant Alibaba has unveiled its latest artificial intelligence model, Qwen 3.5, marking a major step into the so-called agentic AI era. The company says the upgraded model, designed to perform complex tasks autonomously and handle visual and multimodal inputs, is significantly more efficient and cheaper to run than its predecessor. The move underscores intensifying competition in China's fast-moving AI landscape, with domestic rivals and global tech leaders alike racing to develop more capable and cost-effective AI technology. And Goldman Sachs, they've lifted its Australian dollar forecast, citing a more hawkish stance from the Reserve Bank of Australia as a key driver of currency strength. The global bank now sees the AUD-USD climbing in the coming months as markets price in continued RBA strengthening and tightening, underscoring diverging monetary policy expectations against the US dollar. And to the big investors now, Cathie Wood's ARK ETF disclosed its trading activity for Monday, revealing a continued reduction in its position in Discovery Limited. The ARK F fund sold 52,187 shares of the South African media company, worth about $10.5 million as part of a broader trend of divestment from the stock. The move comes after additional sales late last week, underscoring ongoing adjustments within ARK's portfolio strategy. And those are the top stories right there in the global space.